What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 2nd of 2021. Well, folks, I hope you're having a fantastic day wherever you are. And in today's video, we're going to be diving in to analyzing Bitcoin's price and trying to establish some reasonable projections about where price could be headed over the next coming weeks or months. I know a lot of people had heightened expectations of Bitcoin reaching 75K, 100K, 130K, even 200K by the close of the year or early January. And unfortunately, that's just not going to happen. I think that's become clear by this point as we've come to the close of November. So we're going to try to set some realistic expectations and try to look for some key price levels that could signal where price might be going ahead of time so you can be prepared. Now, outside of that as well, we've got two things I want to share. First, we're going to be having a sponsored interview later on with Quid Protocol, a major player in the collectible space that's now making the move into NFTs, bringing some major brands on board. And for full transparency's sake, I'm also invested in the project itself. But outside of that as well, there's a really important challenge that we just launched as a recent for Digifox. As we're getting warmed up to launch Get Paid in Crypto towards the start of the next year, we're starting the waitlist challenge. And this will allow you as an individual to not only join the waitlist by simply downloading the app and joining the waitlist, it's totally free to do so, but by entering into the waitlist and following the specific rules that come with the challenge, you can enter in to not only win potentially a couple $100 of Bitcoin, Ethereum, or a subscription to the Dash Report. So there's a ton of details in regards to the challenge. It's very simple overall to participate, but we'd love as many of you guys to get out there and join in the challenge. There's no cost to it, so I think it's a really great way to sign up and get ready for Get Paid in Crypto as it's coming up hopefully sometime in January. We're really excited. We've been working behind the scenes on this, and it's one of the best ways you can invest in the crypto market. So there's nothing not to love about it. All right, so let's go ahead and dive into the analysis here for Bitcoin's price, guys. I'm going to go ahead and zoom in our chart here, and we're going to go ahead and bring up two potential scenarios here. Now, where price is sitting right now as we've pulled back, we've generally got two things I think we're going to have to look for here. We have two key price levels that have kind of set in these different predictable models here that I've drawn out on the chart. It's just kind of ideations of where things could go. It's $52,000. And along with that as well, around $48,000. These big $1,000 intervals that are very, very important price. Now, I'm going to go ahead and go to the 3-day chart here so we can get our candles compressed a bit more. Why are these levels so significant? Right? Well, first off, we can see here that at 52K, this has been a significant range of previous resistance and support. It was, for example, support here before prices continued climbing higher. It was resistance back here in September as we had a minor pullback after the first initial rally after the May correction. It was along with that a support range that was retested many times, eventually being broken here back in May of 2021 and continuing the follow through. But we can also see here as well was resistance back in the past, and price again tested around this level multiple times. It's one of those key even levels that again, there aren't many out there that have as much consistency as this range serving as resistance and support. So now that we're above it, I think what we need to do right now as price has been stagnant and pulled back over the past couple of days and weeks, I think we need to come down and test that level. I think that's pretty much the kind of optimistic scenario, and the reason it's optimistic is that it's going to set the foundation where we make this range yet again support and start to spring up here going into late January and February, and really maybe kicking off for a chance to reach 100K by sometime in March or April, right? Again, another mid-cycle peak that's going to come with another May-styled correction and then set up the foundation probably from 75K or 70K or 65K to go all the way to $200,000 well into 2022, probably around November, right? So that would fit in line with what we've been talking about a lot on the channel, but I do want to share a more pessimistic scenario. I'm not bearish. I just want to give this as food for thought so you guys can go out and do your own technical analysis and consider anything that might happen. One of the other scenarios that we could have is that we go through a repeat of the price action we saw from January 2021 all the way down here towards July of 2021. Basically, as you can see here, a similar recovery in price that we've seen here over the past couple of months since back in July, and a similar correction. Now, a lot of people might ask, Nick, in this case, does this mean that the market top is in? Would this be, considered a double top? Technically, in the short term, it is a double top if it were to play out like this, right? You would clearly say it's a double top. It's clear, similar resistance range for the most part, right? But I want to go ahead and showcase an example of where we've seen something like this before. And I want to make it clear this wouldn't be the bear market. This would be a potential scenario where prices are setting a long-term accumulation channel that's going to be breaking out and rallying up to those heightened levels around 100K, 150K, 200K, really setting the foundation for the next rally. And I feel if we get this scenario, Bitcoin would spring up big time after breaking to new all-time highs yet again, okay? So I want to go ahead and show you guys what's really interesting here. You might wonder, Nick, where have we seen this before, right? Have we seen it in crypto? Well, we haven't seen it per se in Bitcoin, but we've seen it in a much larger market, the S&P 500, one of the major broad indices for equity markets. Now, again, I understand they're separate markets, right? And history doesn't always repeat, but it does certainly rhyme. And what I mean by this is that technical patterns that you find in equity markets very frequently can be found in crypto markets and vice versa, right? Markets are human driven at the end of the day, right? And again, there are certain things that whether you're using an automated trading system or you're a human trader or investor, you're going to be looking for similar things, similar patterns. It doesn't matter what asset you're trading. That's an important thing to know about crypto. It's all assets at the end of the day, and they're determined by the order book of buyers and sellers. Now, I want to go ahead and showcase this here. As you can see, the S&P 500 here had a really solid rally here going into the 1990s with the peak of the dot-com bubble. Bear in mind, the time frame here is much wider. But you can see here that price had gone up towards around 1,500, down towards around 1,800. Again, very similar correction range to what we saw in Bitcoin, substantial correction. What would traditionally be in equities a bear market, right? But again, a revisit back up after sideways accumulation, coming back up a little bit above the previous highs, channeling sideways, starting to pull back, and then breaking down yet again down to that range. But afterwards, price started to recover for the third attempt towards that general resistance range, and it sprung up big time. And it has been continuing to climb ever since. So some people theorize, and this is something I actually want to give big credit to Tio from the Arcane Bear, good close friend of mine, who basically has emphasized this point that this was likely a long-term accumulation pattern in assets. And ever since then, we've seen a massive continuation in the bull market for equities over the long run, right? So again, these are driven by long-term accumulators and buyers and price of these given assets. And again, even though there are these major sell-offs, right, people are taking the opportunity to accumulate those positions. So the idea here is that we could have a pullback going into Q1 of 2022, relatively quick, maybe a little bit more drawn out than the last time, where we would come back down, retest 30K, and then come up and revisit that range yet again. This would play pretty well into the idea that we're going to have the expanding cycles going into November of 2022. But if we do get this, and I don't want my drawing to confuse you, if we get this and we come back up to these highs, I want you guys to know very clearly that if we revisit back up to this range and clear through and set new all-time highs, this is going to continue to blow up big time, right? This is going to really start to break out because this range that has served as pretty stark resistance for Bitcoin will now have been broken through. We'll be in price discovery, and the FOMO, or the fear of missing out, will be real with institutional investors, any other kind of market participants who are watching on these long-term timeframes and have the capital to actually move markets, right? Again, we're trying to think how the smart money thinks, what basically is going to actually drive prices one way or the other. Now, some of you might be wondering, and I'll admit I missed this part to explain it. Why is it 48K is an important level here? 48K was the key support range back here. Generally, when we had our worst case scenarios in the pullback, we had a pullback here down towards around 48,000, right, where price was generally pushing sideways. Yeah, sure, it dipped a little bit below that, but again, it kept on accumulating here around 48K for, this is the 3-day chart, so multiple trading days. We can see here as well, support range back here where buyers came in again. And once we broke through this range, that's when the momentum really came in for the sell-off down in May. Right? So I think these are really two significant levels to watch for. Either way, they set the foundation for Bitcoin to move higher. But I think we need to be rational in understanding that really anything can happen at this point. And unfortunately, in order to really make those larger moves higher, sometimes you do need some consolidation. You need some pullbacks in the market. You need corrections. Again, I'm not really leaning one way or the other. This is just an interesting kind of video to kind of go through it. I will say one thing that makes the scenario of prices really coming back down that range again a little less favorable. The strength we've been seeing in altcoins and Ethereum predominantly over the past couple days doesn't really spell that this could happen. But again, anything's possible in crypto, right? We could still see Bitcoin pull back, Ethereum pull back, and Ethereum's pullback may not be as severe. Maybe it comes down here to 3,300. That's like, honestly, again, like, this is the worst case scenario that could possibly happen, in my opinion. But again, I think it's just something to keep in mind as we're going throughout the rest of the trading year here towards the close. If we do, on the other hand, start to get a nice solid rebound here, get above 60K again, then I think that we're in a position for prices to probably continue climbing, roughly speaking, right? And we'll get to see that over the next couple trading days if we start to get a vertical climb back up and set up the spring here for the new year, right? But again, I don't see that momentum in the market just yet. No catalyst, no major drivers just at the moment. All right, guys. So with that being said, again, if you guys want to participate in the challenge, I'm going to go ahead and have a link down below in the description so you guys can find the tweet and figure out about all the rules in order to participate. But I want to go ahead and dive into the interview with Michael from Quid. So let's go ahead and jump straight into it. Alrighty, everyone. So in today's interview, I'm sitting down with Michael Bromwich, who is the CEO and co-founder of Quid, one of the latest NFT-based protocols that's helping to streamline NFT adoption and bring on some major consumer brands. Michael, thank you, man, for making the time. I know you guys just recently launched not too long ago, and you guys have been busy out the wazoo since you launched. So I understand as a founder, I understand how that feels. So I just wanted to say thank you, man, for making the time. And I'm excited to explore this area that's still a bit new to me. I really appreciate it.
Yeah, my pleasure. Thanks for having me.
Awesome, man. So I wanted to go ahead and kick things off because there's a lot of people who are obviously getting into the NFT trend. For myself, when I was younger, I did very basic kind of commonplace collectibles, quarters. I used to collect some baseball cards, stamps when I was younger. But now we're really starting to see and showcase a lot of companies that are bringing on major commercial brands into not only just the collectible space, but into the NFT market as well. And I think this has really started to showcase that NFTs are not just kind of a bump in the hill. This is a real trend that's going to be in the long term. So you guys, though, on the other hand, have been around a long time with Quid. You've had an existing product, which I really liked. And I want to hear maybe a little bit of backstory in that case around Quid as a project and how you guys got to where you are today.
Yeah, great question. And obviously, thanks for having me. What's interesting is I think collectibles in general are more valuable when they're older and when they have a bit of a backstory and a bit of a provenance to it. And our company is actually not dissimilar from that. As you mentioned, we've been around for a while. We've been in the digital collectibles game now for a little bit over half a decade. And what got us into this space actually even precedes 2016. So I'd had a very traditional technology career, kind of in Web 1, Web 2, for about 10 years. And then I went to go work for a company called Topps, the old American baseball card company. You know, if you liked baseball or football in the 80s or 90s, it was pretty much impossible to, be a fan of that sport and not get engaged in the hobby of baseball card collecting. But when I went there, it was largely an exercise in how could I use my experience with software development, product management, with digital in general, in order to build, some products, potentially some new businesses, potentially, an overall sort of division dedicated to digital. And we were very fortunate to get into digital trading cards super early on. I mean, we're talking like 2012 when we're selling digital baseball cards, right? That only exist in the context of an app on your phone and only viewable and touchable through a screen. So there is quite a long backstory with Quid that even precedes the 5 years that Quid has been around. But jumping sort of back to 2016, it really was a conviction that was cemented in our time at Topps that we were going to undergo an eventual format shift. Trading cards, whether it's Pokemon or baseball cards, they're sort of stores of value. They're also sort of stores of culture, right? They're sort of pieces of cardboard that store a lot of interesting elements in it, nostalgia, friendships, speculative assets, a great moment from an athlete, right? Or the memory of a pull you made in the hit pack. All that is sort of condensed and captured in this little thin piece of cardboard. And we had this conviction 5 years ago that actually you could recreate that entirely digitally. And so when we started Quid, it really was with this eye towards converting cardboard to code with a conviction that a new generation of individuals that have largely grown up with video games would see no problem in true digital ownership of something that was purely digital. And so what's really sort of compelling about that narrative is much of what we've built with the Quid marketplace, with all the brands we have in circulation, with the 7 million collectors who maintain digital collections on our platform, is that all preceded NFTs. So our approach into blockchain, into NFTs in general, is let's say we weren't the fastest to market, but now that we're in the market, it's really out of a very authentic and credible sort of starting point, where we have a number of collectors who own very valuable items on Quid that are currently stored off chain. And that sort of presents a problem because, as you know, with collectibles, stamps, Pokemon cards, if you own these valuable items and they go up in value and appreciate, you kind of have a problem you have to solve, right? How do you insure it? How do you authenticate it? How do you protect it? How do you ensure you can find the best market to list it and sell it on? It's almost like as the value of your collection appreciates, you kind of have a growing problem. And that's sort of what we have on Quid today, which is very valuable off-chain digital collectibles in circulation, selling for hundreds, if not thousands of dollars. But we need to give buyers the confidence that they can own these objects for decades, if not centuries, right? Yeah. And that's an area, that's almost a use case or an application where blockchain is a superior solution. And an NFT as a format is a superior solution. So I like to think that it's been, a decade-long journey, a half a decade-long journey, but ultimately our approach into getting into the space is sort of with the right sort of intent, and there's an incredibly strong application of the technology. In a lot of ways, what we've been doing on the front end is only enhanced now that we can connect it to the blockchain on the back end.
I wanted to talk real quick, Michael, not to ramble on too long. There was this topic you brought up earlier about this idea of going to digital assets. And I think there were two things really that for me, as I reflected back on them, there were two moments that made me realize okay, we shouldn't laugh off the idea of digital collectibles, right? Every new trend is very easy to brush off until it becomes a trend. And I think two of them for me were when I used to play Counter-Strike. And for me, I remember seeing people paying 10 times the actual game value for a digital skin within the game. That to me was okay, this is a market, this is going to be here. And I remember when Pokemon Go came out and you had a Pokemon game that was, based around augmented reality, going around the world and collecting these virtual Pokemon you couldn't even use in battle. And there would be 500 people in Times Square, going down, chasing, trying to get one of these Pokemon. And I thought, okay, you know what? Something's going to give here. So, but one thing I think that's so great is this point you talked about is look, you guys are jumping and you already have a real product, which to me is just already is a green flag that makes me really excited. But outside of that as well, one thing that I think you guys do really right is you have this concept that kind of flips the narrative of NFTs off, kind of on its shoes and stuff, basically, where instead of just building this new art place of collectibles on chain and trying to bring it out to the outside world, you guys are bringing existing collectibles, in this case, digital collectibles with mainstream brands that people already know about and really desire. And you're building a method for them to actually bring them on chain and authenticate them. And I think that that's a really interesting kind of role reversal here on how NFTs could scale long-term. Utilizing blockchain and the actual minting of NFTs is almost, as you mentioned, the certification, the ultimate certification of collectibles.
Well, yeah, and there's a lot in that. I mean, I've been in the game long enough, Quid's been around long enough that we actually remember having conversations with folks about digital collectibles and them scratching their heads and totally not getting it. And I think in hindsight, I should have just said the metaverse, and then that would have been a sufficient explanation for it. But our approach is what we call Mintables, and our ultimate mission is to really bring NFTs to the masses, and not 1 million people, not 10 million people. We're talking 100 million or 1 billion people, and that's actually really tricky and really hard to do when you sort of break down that problem and attempt to address it. It's more than just making technical onboarding a few steps, shorter. And so our approach ultimately is really to go after 1 billion digital collectors. And to do that, we have to find a way to get valuable objects in their possession in as sort of short of time as possible, ultimately. And so what we do is we essentially sell items in our primary market and also facilitate a resale aftermarket on a peer-to-peer basis between collectors of digital collectibles that exist off-chain. What that allows us to do is keep gas fees down for collectors that have environmental concerns. It allows us to sort of sidestep some of those concerns. It allows us to handle a very high volume of low price transactions, again, without gas fees and without the need to even hold a cryptocurrency. We can literally get a digital collectible in the hands of a collector in 60 seconds or less. And in many cases, even if that collector doesn't have a credit card. So our approach ultimately is to be able to issue collectibles that are held off chain and then use a very, how should I say, a very familiar metaphor for these collectors in order to help them understand the benefits of moving their item from off chain to on chain. And we call it Mintables. And the metaphor is very similar to how physical collectibles work today. You open a lot of packs. Some of the stuff you get is super valuable. It represents 1 to 5% of your collection. The other stuff you put in your binder or your box, and you're not necessarily gonna sort of think about it in 5, 10, 15 years. You're not gonna try to, pay for your daughter's wedding in 20 years with 90% of what you own.
Right.
But of that 10%, 5%, or 1%, that's the super valuable stuff that you want to hold for a long time. And that's what physical collectors are used to. And that's really the metaphor that we're borrowing from liberally and bringing into this digital environment, which is you've got a collection of 100 items or 1,000 items on Quid. One of them, 10 of them, 50 of them actually are very, very valuable in this off-chain context. You're receiving a lot of interest from potential buyers. You're receiving offers that have hundreds of dollars, if not thousands of dollars attached to them, but you've also got a problem. I want to hold this forever. So how do I do that? Well, this is where blockchain technology comes in, and this is where our minting gateways comes in. So in very, very short order, a collector on Quid will be able to make a decision of wallet, of chain, and of smart contract in terms of taking their off-chain collectible and minting it on-chain. And again, it's really borrowing from that metaphor. If you hold something very valuable, now let's make sure you can get the peace of mind around permanence that almost exclusively the blockchain can provide versus centralized services. And one last point, you had mentioned brands. We've been sort of very prolifically licensing brands for about the last half a decade. Brands are very, very important because they establish almost from Jump Street an emotional connection between the collector and the digital asset itself. And so we are partners of the NBA, of Disney, of HBO, of Sony, CBS. There are over 300 brands that you can collect on Quid that have actually already been issued and are floating around in circulation, only sort of gaining in value.
Right. That's very cool, Michael. I was going to say one thing that I admire overall from the time that we've talked, as well as my understanding from the light paper, the project. You guys have had an existing product so far, and as you mentioned, these brands and stuff that are going to help to scale out NFTs and digital collectibles towards a larger audience. One thing that I think you mentioned as well previously when we were chatting was this idea of building out an API and being able to really allow for this marketplace to scale towards not only other different areas, but also allowing for various brands to be able to build these types of collectibles within your ecosystem. So if you want to maybe dive into that, I think that that's honestly one of the biggest issues is all these companies are like, hey, how can we get into this space? Where's an API or service that we can tap into to finally get a piece of this market?
Yeah, exactly. Well, and to go back to even our conversation earlier, so we have issued the Quid token. The Quid token IDO'd on Focus Starter last week. There are a number of liquidity pools where you can get access to that token. ApeSwap, PancakeSwap. There's obviously more pools and exchanges to come that I can't comment on now, but obviously follow the project and follow along. But the issuance of the token and having this be the official utility token of the Quid marketplace is a very important step for us to move solidly into Web3. I sort of liken it to what if eBay issued a token in 1998 and you could participate in that. But this token is sort of essential for building a new collectibles economy, one where the participants in our marketplace aren't just buyers and sellers, and they're not just payers or players, right? But they're members or their owners. And it's essential to sort of create that alignment between all the participants in the overall economy because of some of the big ambitious things we want to do. You talked about an API, right? I think it is short-sighted to look at Quid simply as an app on iOS or Android or a website where you can buy and sell digital collectibles and NFTs. I think that is the current state of the business and the current state of the market, but that's not how I see things transpiring over the next 3 years, 5 years, or 10 years. If you think about collectibles economies, whether it's art, wine, collectible watches, collectible cars, Pokemon cards, baseball cards, those are basically industries up to themselves within the aftermarket. You have individuals who have become such good collectors that they transition from this being a personal hobby and into a full-time business.
Right.
And then what you have is technology and infrastructure that exists to support that hobby shop or that market maker or that high-end art dealer, right? And so in our vision of the world, there is a moment in the near future where we begin to break outside of the bounds of an individual application or an individual website. And instead, what we're doing is providing essential infrastructure to power collections and collecting and digital hobby shops that exist far outside of our first party applications. So a concept that might be sort of familiar is something like Shopify, right?
Or like AWS for cloud services. Like you want to build the absolute foundation that's totally customizable.
Exactly. And that it's really, it's essential to support something like that because that's a marker of the health of your collectibles ecosystem, that there's enough market activity, there's enough interest, there's enough alignment that you do have individuals that are saying, look, I'm already spending 40 or 50 hours collecting for my own personal reasons, right? Within this community, within this marketplace, within this ecosystem. Maybe you want to take it to the next level. Maybe I'm going to build the quintessential hobby shop for Game of Thrones. And I'm going to run the largest global hobby shop for Game of Thrones anywhere on the planet. That's a sort of a realistic aspiration, given what we're seeing with our community. And it is an aspiration that we want to support with incentives, of course, and with tools, technology, and infrastructure to power that. So take a popular sort of NFT experience like Top Shot, for instance, right? That's largely within an application in a context on a single chain that everybody sort of knows and is familiar with at this point. But what if you utterly decentralize that down to the application layer? And instead, your first window into it was a basketball fan telling you how excited they were about these NFTs, and that were your point of entry. And so, yeah, I think it's so early days for NFTs. It's so early days for digital collectibles. And there's a moment in time in the near future where you may think of players in this NFT space less as application layers, less as containers, and less as first-party services that bring this stuff to market, and frankly, more as wholesalers of infrastructure to enable others to build businesses on top of this. We're a subsidiary of Animoca Brands. A fellow subsidiary is the Sandbox, which is, I think, the leading metaverse in the blockchain space. And what's so wonderful about sort of their economic system is you have individuals buying land and building businesses on top of the land. It's almost like a digital city. And I do think in digital collectibles, we're not quite there yet, but I think in the near future, you're going to see a transition where there's a value chain, there's a distribution network, and there are digital hobby shops of sort of motivated buyers, sellers, collectors, owners and community members that, has them bring this stuff to market as opposed to a single a single entity like Quid.
You're bringing up like a great point, Michael, that I think kind of defines like, there's, and for example, in like fintech, right? There's tons of applications out there that are going to build a nice neobank experience where it's something better than your bank. You'll get better
Yeah.
interest. You can do free payments, invest in companies you want in a more convenient way. But the problem is that, what defines a standard company and the titans of the 21st century when it comes to corporations is those who try to focus on, trying to build a niche experience versus the one who's building the foundation for all of those companies to build that experience. You and I, we don't know how to reach every single collectibles market. We don't know how to build that one premier experience. So if you can give that foundation and tools to people, that's when you really start to scale out the infrastructure to not only make it simpler for people to do great things, but also to reach a much wider audience in your business.
Right. And that's actually an adoption pattern that is very sort of organic and authentic to physical collectibles. It's not that Topps, for instance, runs an advertisement during the Super Bowl that gets a number of baseball fans excited about collecting. Usually the adoption pattern is one collector talking to another collector. So a veteran talking to a noob, right? An older individual talking to someone younger that's the next generation. A lot of this stuff is shared actually socially, and it's sort of grown on a peer-to-peer basis where it's the collectors themselves that actually grow the community overall because they say, hey, I'm obsessed with this thing. This is my best NFT, or, look at this particular brand where I know you watch the show or you read the comic book or you like the movie or whatever it might be, check this out. And so really, I think it's incumbent upon a lot of NFT players, like ourselves, to sort of build the infrastructure to assist the community in helping grow the community. I mean, that's a big lesson I have from my time even prior to Quid, is the real hero in this whole ecosystem is actually the collector, right? Which is a lot of reason why we've moved aggressively into Web3, a lot of reason why we've issued this token. A big reason why we've got a tools focus and infrastructure focus is, we have 7 million collectors that over 5 years have been buying and selling digital collectibles on Quid. They very soon will have the ability to mint these objects to their chain of choice as NFTs. Really, our best approach is to take these 7 million collectors and empower them to make this community as big or as small as they want it to be. It's a natural pattern, and I think it's ultimately sort of the healthiest way to build an overall ecosystem. And there's a lot of patterns, frankly, to the world of PFPs, whether it's Bored Ape, where those sort of were dropped and then the community took it and just
ran with
it up.
Yeah.
Absolutely.
Very cool. Michael, I mean, this has been really insightful, man. It's nice to just get that vision about where you guys want to scale it. And I think, again, it's a very humble mindset to think in a long-term vision, take the previous experience that you guys have already built up and have this approach of getting into the crypto space, utilizing various networks to authenticate, using Mintables, and then moving on towards scaling through APIs and additional infrastructure. So I love it, man. It's very, very cool.
I'll just piggyback on that. It is a bit of a superpower if you have a time horizon that is incredibly long, right? We don't think in days or weeks or even quarters. We think in years or decades. And it's liberating and really empowering to have that long-term vision and be able to have a roadmap that you can roll out over that period of time. And it's also, frankly, essential in the space that we're in. I believe there are, if you're familiar with baseball, one of the most sought after cards is the Honus Wagner card. That's almost over 100 years old. I believe right now there are digital Honus Wagners sitting in someone's collection in Quid. But for that collector to get the full benefit of that collectible they own, it's important that item and that Quid in general is around for 5 years, 10 years, 20 years. In a lot of ways, collectibles, whether it's fine art, wine, or digital trading cards, it's a long-term game. So it's incumbent upon the service or sort of the organized community to have that same long-term mindset. Exactly. And it also helps too that we can really say that when you check out Quid, I mean, it really is super early days. To steal another baseball metaphor, I don't even think we're in the first inning here. I think we're literally on the on deck circle, just waiting just waiting to start the game.
We're about to go to bat up, basically. We're about to see the Grand Slam. Yeah.
Absolutely.
Very cool. Michael, honestly, man, thank you for making the time. I just wanted to let you guys know who are watching. If you guys are interested to learn more about what Quid and what Michael and the team are doing, I'm going to leave a link down below in the description so you guys can check into that. But again, I just wanted to say thank you all for sticking around for the interview. It was really insightful. And I got to say, as you guys know, I was more of a DeFi head. I'm really starting to dive into NFTs, the metaverse. I think there's a lot of exciting things going on. And again, it's something that we got to keep our eyes open to and stuff in every trend. So Michael, you guys are definitely on the ball with this one. And I'm excited to see how things continue to grow. I appreciate you making the time, man. I know you're busy. So thank you.
You bet. Thank you so much.